Happy Monday, guys. I'm Jeff Zananeri, and this is Joy of the Trade. Today, I want to talk to you about a crucial situation that's setting up in the macro world, and it's going to have effects on everything that trades in a market, that's priced in money, that trades in general. What I'm talking about today is the dollar. Those of you guys that follow macro, follow the global environment, understand how things trade around the world and how global macroeconomics works will know that the US dollar is the central factor that has ripple effects across everything. So to understand the dollar means to know and to understand macro. So it's so important to study. It's so important to pay close attention to. And we had a move last week. We had a really interesting move last week that is already playing out in different asset classes around the world. And I'm going to show you just what I'm looking at right now. So last week, Mr. Powell came out and the dollar was trading in the low 90s, right around its low. So if we look at the low, which was 88, which was made then, it was trading around 90. It was trading around 90 and a little bit under 90. And so when they flip-flopped and it finally acknowledged that there could possibly be inflation, wow, big shocking effect, right? The dollar did something nasty to a lot of people. It did this move here. It moved up a quick 2% in people's faces, which might not sound like a lot to stock people, but in FX land, 2% is a massive move. Just remember back last year in 2020, when COVID struck, we went from the mid 90s to boom, up 100, almost 103, give or take. And that was like a 7% move in the dollar index. What the dollar index is, it's a basket of what the dollar trades against the euro, the pound, the yen, Swissy, all these different currencies. And it gives you a good feeling of how the dollar is doing. Is the dollar strong? Is the dollar weak, right? So when the dollar index goes up, the DXY index goes up, that means the dollar is strong. What happened when the dollar went really strong last March? Well, we all remember the stocks, what they did. They just collapsed. They crashed 30%, right? So this move here, we've been cascading lower along with the markets going higher. So now we've had this huge move up, So what do I make of this move? Well, we bottomed out. We bounced off of the bottom for a second time. So we had this bottoming out at the end of last year. We retested it this year. And now we're bouncing off 90 again, okay? So what does that mean? This that I brought up for you, these weird lines here, is called the Fibonacci retracement. So I took from that high point to the low point, and then there's a mathematical formula that shows you the percentage rebounds, what levels they would be at. So key numbers are 50% rebound or a 61.8% rebound. If we get to this 50% rebound, that's 96. And if we get to the 61.8% rebound, that would be 97.71, right? So from 92, we're looking at another 4 to 6% move stronger in the dollar. Well, why does that matter? That matters because commodities are all priced in dollars. And we've seen what's been happening in commodities lately. They've been getting crushed. International companies like Apple like a weak dollar so that they can sell stuff overseas that people can afford. Dollar gets stronger, their products get more expensive. Things like Bitcoin. Let's look at Bitcoin here. Check this thing out. Bitcoin is obviously trading in dollars, right? So we're having this crypto crash is kind of happening right now around the world. And that last move here could have a lot to do with this dollar getting stronger. So if this dollar goes up 5%, you could expect Bitcoin to break under this 30,000 level and probably trade somewhere in the mid 20s. That wouldn't be unreasonable. So we're looking at that, and let's look at emerging markets. Look at the effects on emerging markets. Emerging markets just broke underneath the 50-day and 100-day moving average. If we pull up this dollar index, you could see that there's like counter moves happening. This moves up, this blue line here, that moves down, move up, move down. Those are all emerging market stocks. And so commodity index, the same thing. We can go across the board and we can see the effects that the dollar has on everything. So pay attention. Pay attention, because if you hear them talking on TV, they're going to be talking about a dollar. Strong dollar could be very, very bad for the stock market, very bad for cryptos, very bad for multinational companies, even big ones. People are saying, oh, you can hide in these big cap tech. Depends. Not so fast. Depends how bad that dollar move gets. It's going to have effects on everything. So pay close attention. That was a macro lesson at Joy of the Trade. I like to talk more individual stocks per se, but this is a move that we really have to focus on and pay attention to. This week, there's going to be some Fed talk. There's going to be Powell talking to Congress. There's going to be Bullard, who wrangled the markets on Friday. He's going to be out making statements. So pay close attention to what the dollar is doing. And you can look at that through the basket DXY, and you can see what it's doing across all different currency pairs. So LFG, guys, if you like this video, if you learned something, like it on YouTube. If you haven't already subscribed to Wealth Press, do it now. I'm Jeff Sandin, area Joy of the Trade. I'll be back with more videos late in the week.